Hey everyone, and welcome to This Explainer. Today we're diving deep into the upcoming Laser Power and Infra Limited IPO. Whether you're a seasoned market veteran or a retail investor just looking for a smart place to park your capital, we've got a single goal today. We're going to break down the timeline, the business realities, and the hard numbers. No hype, just the facts. Let's get right into it.
Here's our roadmap for today. First, we'll do a quick company overview. Then we'll hit the IPO dates and price, followed by fund utilization. After that, we'll look at the company's financial status and wrap up with some really important investment considerations.
All right, part one, company overview, taking a look at Laser Power and Infra Limited's background.
So before we even look at share prices, we need to know exactly who we're dealing with. And, what's really interesting here is the timeline. Laser Power and Infra is definitely not some flash-in-the-pan startup just riding a trend. No, they were established way back in 1988. They manufacture power cables, conductors, and transmission products. Basically, they've spent nearly 4 decades building up massive supply chains in both domestic and international markets.
Moving on to part two, IPO dates and price. Let's get into the critical offering details.
Okay, this is where you really need to pay close attention, because the window for action here is surprisingly brief. The IPO officially opens on the 9th of July, 2026, but it closes just a few days later, on the 13th. From there, things move incredibly fast toward an expected stock listing on the 16th of July. It is a super tight timeline, so your research and your funds, they need to be ready well before that opening bell rings.
Now for the actual costs. The company has set a price band of 203 to 214 rupees per share. But as you probably know, in an IPO, you bid in mandatory lots. For this specific offering, the lot size is 70 shares. That means you absolutely must bid for at least one lot of 70, or multiples of 70 if you want to participate.
So what does that actually mean for your wallet? Well, if you're a retail investor and you're bidding at the upper band of 214 rupees, to maximize your chances of getting an allotment, and you multiply that by that 70 share lot size, you get exactly 14,980 rupees. That right there is your absolute minimum investment just to get a foot in the door.
But zooming out from the retail level for a second, the macro picture here is massive. 742 crore rupees. That is the total issue size of this public offering. Laser Power and Infra is looking to raise a staggering amount of capital from the public markets with this one.
All right, part three, fund utilization. Where exactly is all this money going? When a company raises 742 crore rupees, the absolute first thing you should be asking is, how exactly will those funds be utilized? Because honestly, understanding this tells you so much about a company's strategic roadmap.
So, the company has 2 primary goals here. First up, the repayment of some existing debt. Now, this is a very classic IPO strategy. Clearing debt reduces their interest burdens, and it instantly strengthens that balance sheet. The second goal is funding general corporate purposes. That's basically an umbrella term, right? It gives management the flexibility they need for day-to-day operations and any unforeseen expenses. Moving to part 4, the company's financial status. Let's check out their performance metrics.
Now let's look at the hard financial realities leading up to this IPO. For the period ending March 31, 2025, the company generated a really incredible revenue of 2,460.33 crore rupees. And from that top line, they secured a net profit after tax of 100.53 crore rupees. I mean, just let those numbers sink in for a second. This is a business that is already operating at a massive multi-thousand crore scale.
But numbers in isolation, they really only tell half the story. The trend is the real signal. And the good news is, these current financials don't represent some sudden, unexplained spike right before going public. They actually reflect a very steady, consistent growth trajectory in both revenue and net profit over recent years.
Finally, part 5, important investment considerations. Let's talk about the risk factors.
Of course, absolutely no financial analysis is complete without flipping the coin, right? So what are the headwinds? Well, objectively, their realities are quite clear. This business is deeply, deeply tied to the overall health of the power and infrastructure sectors. They are highly dependent on successfully securing both government and private projects. So think about it. If public infrastructure spending slows down, or if private development hits pause, the demand for their products is going to take a direct hit. Which really leaves us with one vital question to ponder. How will future infrastructure trends shape this company's growth?
As an investor, you have to weigh those impressive 9-figure profit margins against the macroeconomic realities of the whole infrastructure sector. Will the current power sector boom carry them even higher, or will economic shifts start to tighten the very budgets that they rely on? It's like a giant puzzle you have to solve before jumping in. Thank you so much for joining me for this explainer. Keep asking the hard questions, and I'll see you in the next one.